Me just holding Bitcoin gives it value. If there's more people like me who don't do anything with their Bitcoin, but just hold their Bitcoin, that attributes value to Bitcoin. And people like me fundamentally believe that when they want to sell their Bitcoin, there will be somebody there in whatever country I end up being, or I end up giving it to somebody, that Bitcoin will have value. Most of us believe that it'll have more value than what it has today, but some of us just need to make sure that it doesn't go down in purchasing power.
Although the price fluctuations of Bitcoin frequently appear unpredictable, Fred Krueger thinks there is a deeper reason behind the volatility. In the beginning, Bitcoin's price fluctuated quickly due to market emotion, much like any other speculative asset. Krueger does, however, note a significant change. Liquidity models are now essential to comprehending the behavior of Bitcoin. The price of Bitcoin is becoming more and more impacted by liquidity flows and the larger dynamics of conventional financial markets rather than only responding to news or hype. Krueger notes that while significant liquidity events will continue to cause abrupt movements, Bitcoin's volatility may level off as institutional involvement increases. Please remember to like this video, subscribe to our channel, and enable post notifications if you have a strong interest in learning about the future of finance and the function of digital assets like Bitcoin. This will ensure that you never miss anything. Thank you and enjoy the video.
What makes Bitcoin price go up? Is it scarcity? No. It's not scarcity. Is it hash rate? No. So what is it? And I think this statement is exactly the right answer to the question. Bitcoin price is going up because it's a growing network of people who think that Bitcoin is a good place to store value. Okay. So what do I mean by that? There clearly is a network effect going on. Bitcoin started in 2009. There was about 100 users of Bitcoin. There was 100 people mining Bitcoin. They weren't even sending Bitcoin to each other. They were just mining it. In 2010, they started sending it to each other. We had the first real exchange, Mt. Gox, in 2013. So the network started growing, and the number of users of the Bitcoin network, the number of addresses is growing at roughly the cubed of the time since the Genesis block. But there's also other kinds of network effects going on here, and we'll get into those a little bit later. So what are people buying Bitcoin for? Well, they're not buying it for just a very short amount of time, although initially they're buying it because they wanted to buy some drugs on Silk Road. But a lot of since the beginning, people were buying and holding Bitcoin for a fairly long duration. It could be months, it could be years. I've held Bitcoin for not a decade, but it's getting into a lot of years. I think I'm kind of normal. This is just sort of a normal thing. You buy Bitcoin, you don't sell it. You're not using it for day-to-day purchases. So it really is right now. It's being used as a store of value. But there's a growing network of people that are starting to use this thing as a store of value. And so me just holding Bitcoin gives it value. If there's more people like me who don't do anything with their Bitcoin, but just hold their Bitcoin, that attributes value to Bitcoin. And people like me fundamentally believe that when they want to sell their Bitcoin, there will be somebody there in whatever country I end up being, or I end up giving it to somebody, that Bitcoin will have value. Most of us believe that it'll have more value than what it has today, but some of us just need to make sure that it doesn't go down in purchasing power. So if you're living in a place like China or India, and you're not really happy with the kind of the government or the banking system or just the entire country, you want to get your money out of the country. You don't necessarily need it to grow in value, grow in purchasing power. You just need to have it not go down. And I think that fundamental belief is, a lot of people are starting to say, well, this thing is risky. It's moving up and down a lot, but I don't need it for the next year or two. I don't need that money. And I think it might be a good place to just park it for a period of time. To some extent, this is geographical, because if you need to sell your Bitcoin wherever you are, you're going to need to have somebody give you back that currency in that country. It could be USD if you're in the US. It could be fiat in India. It could be, so the rails there are important. Eventually you'll be able to buy things like houses directly with your Bitcoin. And so as this network of Bitcoin believers grow, all the other parts of this world grow. So fiat rails grow, exchanges grow, banks grow. We're going to see in the US the ability to take your dollars in your bank account and get USDC, and then take that USDC and swap it for Bitcoin, or take Bitcoin, swap it for USDC, and then move it back to Bitcoin, to the bank system, or even maybe buy Bitcoin directly in your bank. So all these things are coming, and all of these things contribute to the network effect of Bitcoin.
Fred Krueger eliminates a widespread misconception regarding Bitcoin, especially the connection between its price and hash rate. Many people think that when the hash rate increases, the price of Bitcoin should also increase. According to Krueger, however, it's actually the reverse. The hash rate rises as more miners are drawn to Bitcoin as its price rises. Although a higher hash rate increases network security, the price is not immediately affected. The majority of investors do not base their purchasing decisions on mining statistics, Krueger adds. Instead, they put their money into Bitcoin because they think it will be worth a lot in the future and can be used as a store of wealth. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
So, scarcity is needed, it's necessary, but it's not sufficient. So if you look at, Bitcoin Cash, it has almost the same code base as Bitcoin. Same with Bitcoin SV and all the other forks of Bitcoin. But because they have the same code base, or close to the same code base, it doesn't mean they have the network effect. So, in 2017, at the end of 2017, when we forked over to Bitcoin and Bitcoin Cash, we had sort of a VH1 versus Betamax situation, and Bitcoin Cash ended up being Betamax. Is it better? I don't know. You could argue maybe that the bigger blocks would have been fine. You can argue the opposite. It doesn't matter, because the world chose VHS. The world standardized on Bitcoin. So Bitcoin Cash ended up not really working. And the Bitcoin Cash relative to Bitcoin is a straight line down. So the flaw in thinking about scarcity is you're looking at a necessary and not sufficient condition. So this entire stock to flow model that was popular, actually starting around 2019, was basing everything off of scarcity. And Giovanni sensed this was flawed. Others sensed it was flawed. Corey Klippstein sensed it was flawed. And now the model is clearly mathematically broken, completely mathematically broken. It doesn't hold up. It was changed. It was tweaked. But it was conceptually broken right from the start, because scarcity is not what drives value. What drives value is the network, and so that's really the key. And I think Rob from our spaces, Silicon Valley Rob, kind of really nailed this. He's like, look, I've invested in a lot of businesses. We've invested in a lot of businesses in Silicon Valley. It's all about networks. And this is no different. It's a network. But it's a network of people who believe in this as a store of value. That's what it is. What about hash rate? Well, a lot of people look at hash rate and they're like, wow, the hash rate's going up. That means the Bitcoin price has to go up. Well, nah. Hash rate does make the network more secure. And so you might think there's a relationship where hash rate is driving Bitcoin price. And I've argued with this with Giovanni. To the point of, like, I had to eventually ban him. Bitcoin price plus technology drives hash rate. It's not the other. It's not the other way. There's a flow of causality between Bitcoin price and hash rate, and not hash rate to Bitcoin price. And if you think about it, nobody is buying Bitcoin just because we hit 1 zeta hash. It doesn't matter to the average person buying it. Just think of some guy in China buying Bitcoin. He's not going, let's check the hash rate today. Hash rate's higher. I'm going to pay more for that Bitcoin. No, that's not what you're doing at all. It's just, you're going to be going into the network, whatever the network price is, and you're going to be buying it at that price.
Fred Krueger explains why the value of Bitcoin cannot be driven just by scarcity. Scarcity is crucial, but not sufficient, he explains. He illustrates how having a code base and scarcity identical to Bitcoin did not help Bitcoin Cash succeed by using it as an example. The market eventually selected Bitcoin despite arguments about whether the larger blocks of Bitcoin Cash were superior, resulting in a powerful network effect, not necessarily because it was superior, but rather because it became the norm. Additionally, Krueger criticizes the widely accepted stock-to-flow model, which only considers scarcity as a value driver. He contends that because it disregarded the crucial part that network effects play, this model was faulty from the start. According to him, the network of people who think of Bitcoin as a store of value is what makes it valuable, not its scarcity. He then addresses yet another hash rate and pricing misunderstanding. Although many believe that a growing hash rate drives up the price of Bitcoin, Krueger maintains that the opposite is true. Price rise draws in more miners, which raises the hash rate. The hash rate has no bearing on the typical investor's choice to purchase Bitcoin. Adoption is mostly driven by the network effect and the recognition of Bitcoin's special features, such as its self-custody capabilities, borderless transactions, and resistance to censorship. Krueger concludes by highlighting the magic that many people experience when they fully comprehend Bitcoin. Bitcoin's strength lies not only in its technical measurements or scarcity, but also in its expanding community of believers and adopters. In order to share this life-changing event with others, he and his co-author decided to publish a book as a result of their passion for Bitcoin. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.